Welcome to TradeTheMBI.com. This is John. This reports for the 24th of February. Well, as we got our DOC orange here above that 13.5, I said to suggest a little bit of weakness. It was tiny softness. Really dipped down, came right to the ABM, and started to get buyers from there. And that's simply because you got a full reset of the steel, and the reality is you're seeing no long-term buyer fading here. Mid-term buyers have kind of eased off a little bit, so we could get a little crossover here. If that takes place as well, then we could see a little bit more distribution into the move as it is. Wouldn't be surprised. I mean, we've gone quite a ways, quite some time, a little bit more exaggerated on the NASDAQ, as you can see there. Dow still holding up nicely, though, with the euro. Central bank intervention right at our line, and there you go. Right back to the bottom side. It's still precarious, don't get me wrong. It's still not super healthy. There are a lot of headwinds, particularly with what we still hear coming out of Europe. But, you know, you could talk about it for days and days and days because it's still going to be weeks and months before anything, before votes take place. And that's when it's really going to hit critical mass when that takes place. Bonds still hanging in there, holding flat. There's still a lot of confusion as to what the Fed can do, what's going to happen with taxes. Looks like a lot of stall out of nothing. And if that's the case, then we could see a significant rein-in of where price has been, simply because lack of expectations being met. Oil, again, they had huge inventory buildups, but at the end of the day, it's still pretty stable. I mean, there's a baseline right here for where things are going to go, but you know, gold is telling me the story. Inflation is finally going to come back. How horrible it'll be, that's relative, but at the end of the day, it's definitely going to, this is telling us that there is a dynamic change in the way the economy is behaving as far as price goes, and it's an indication that the Fed may actually lose control over what it can and can't do. It may be forced to raise rates whether it wants to or not, which is always an interesting proposition. So I've given us this 2360 line. We were above, below, back above. Okay, this lasted for 3 or 4 days the last time they did that. So depending on how long before we get that, total, break up, if that's what our readings are going to give us at the time, we'll see. But as again, below that 2360, you can be short, and back above it, long. I mean, it becomes a nice flux point. It was a good read off the short breakdown, gave for the buy a little bit late right in there, and then we got soft, pretty much right back even with it. So it's kind of a waste. The easiest way to describe it was just a waste. Been a lot of those days this month. It's been strange. Once we had our blowout move, which, I mean, and again, that's one of those things where you have to go with what is, and we were right on the money with it, and that is where all the money was made for this entire month. So it's just the way it works sometimes. We can see it from the beginning of February. Once we caught that wave coming in with the new fund money coming in around the 6th, and then it was just the explosion from there, and it's just been soft since. So as always, though, could you look for me on the Skype chat? Trade well.